Hi there everyone, great to have your company on Kalkine TV. I'm Rose Jacobs and you're watching Buzzing Trends. Today we'll be looking at the top 5 ASX-listed growth shares of 21, ranked on the basis of the year-to-date returns. So let's get stuck into it. The growth stocks belong to the companies that report higher revenues and profits than average companies within the same industry. Due to their high growth potential, these stocks are in high demand among investors. Despite the ASX remaining volatile in the past few months, growth stocks have given decent returns to shareholders. However, these stocks generally distribute lower dividends than others, which can be a drawback for some investors. So investors should decide to include growth stocks in their portfolios based on their needs and risk-taking capacity. With this in mind, let's take a look at the top 5 ASX-listed growth shares of 21 ranked on the basis of the year-to-date returns. First is Novonix. Novonix is an Australia-based battery materials and technology company. The company is focused on investment in scalability efforts to improve production capacity of anode materials, commercialisation of the company's cathode technology, as well as expanding cell assembly and testing capabilities. Novonix stock has given a year-to-date return of over 628%. In the latest results, the company released 2 change of directors interest notices. According to the notices, Executive Director Robert Natter and Non-Executive Chair Anthony Bellis exercised their performance rights to acquire more Novonix shares. The company recently announced the opening of a new facility in Chattanooga in the US. The company said this new facility would produce the high purity and high consistency anode material required for long life batteries, specifically for electric vehicles and similar storage applications. Next is Vulcan Energy Resources. Vulcan Energy is an Australian-based energy metals exploration company. It is engaged in developing a combined geothermal and lithium extraction project in the Upper Rhine Valley of Germany. Vulcan stock has given a year-to-date return of over 320%. In October of 21, the company announced that it had signed a binding lithium hydroxide offtake pact with Umicore, a leader in cathode materials production applied in Li-ion batteries for electrified transportation. In the September 2021 quarter, the company also signed deals with LG Energy Solution and Renault Group to supply battery-grade lithium chemicals. Moving on to Lynas Rare Earths. Lynas is an Australian rare earths mining company listed on the ASX as an S&P ASX 200 company. It has 2 major operations, a mining and concentration plant at Mount Weld, Western Australia, and a refining facility at Kuantan, Malaysia. Lynas Rare Earths stock has given a year-to-date return of over 117%. The company, in its last week's AGM, revised upwards forecasts for the demand for neodymium-praseodymium, an alloy used in numerous tech products and applications such as electric motors. The company currently expects an annual growth rate of 10% in this division, up 300 basis points from the previous estimates. The forecast upgrade is on account of the increasing demand for electric vehicles. The next stock is IGO, an Australian-based exploration and mining company. The company is focused on discovering, developing and operating assets focused on metals critical to enabling clean energy. IGO has core operations into non-operator gold mining under Tropicana Gold Mine, nickel mining under Long operation and zinc and byproduct mining under Jaguar operations. IGO stock has given a year-to-date return of over 64%. The company yesterday announced plans to acquire Western Areas for $1.096 billion Australian. The move is expected to turn IGO into a major regional player, boosting its nickel output from 25,000 to 27,000 tonnes in the financial year 2022. And the last stock to look at for today is Lovisa. Lovisa is a locally owned public company deriving revenue from the retail sale of fast fashion jewellery and accessories. The company employs approximately 1,340 people, operates in Australia, New Zealand, Europe, Asia and South Africa, and is administered by its head office in Hawthorn, Victoria. Lovisa stock has given a year-to-date return of over 64%. The Lovisa share price has doubled over the past year and gained over 400% since March 2020 and since the pandemic sell-off lows. The company's revenue only fell 3% in the financial year 2020 and rebounded strongly, rising by 18% in the financial year 2021. But that's it for now. We'll be back soon with more shows to share the latest market insights with you. Until then, stay tuned with Kalkine TV for more stock, business and economy related hot trends.